Time for business with our business editor, Ari Rabinovitch. Hey, Ari, how are you?
It's an interest rate day, and it's been a very interesting day. Let's start with that.
Let's start with that. On the way down, as you predicted yesterday.
Yeah, I don't want to say I told you so, but I kind of did.
Yeah.
Okay, well, yes, no surprises today, Cynthia. The Bank of Canada lowered its key policy rate by 25 basis points as expected, and for the second straight meeting, bringing that overnight lending rate down to 4.5%. So what does that all mean? Well, banks like Bank of Montreal, TD Bank, RBC, Bank of Nova Scotia, and National Bank are lowering their prime lending rates starting tomorrow morning in response. So that means those that are going to apply for a mortgage as of tomorrow, or those currently with variable rate mortgages, will be able to get a better rate and have their monthly expenses a little bit less than they were in the previous month. So this should all come as good news, but it's going to be a while before the broader market sentiment or the overall economy feels the relief that this is going to bring to the cost of borrowing. So we might feel it in the real estate market, but only so much so. We did hear from the governor of the Bank of Canada, Tiff Macklem, Cynthia, after this announcement. And although it was a cause for celebration, there's also some cautious tones coming from Macklem today. He said that they want to maintain that there still could be headwinds coming from shelter prices. So that is the cost of housing as well as rents, that actually could have another effect on bringing inflation up in the long term. So there still is a lot more work to be done, essentially.
So not out of the woods, basically.
Exactly. But
okay.
There is some optimism about September. Probably going to see another cut then, too.
I'm sure a lot of people would appreciate that, Ari. Now, we're learning some more details about last week's tech outage that continues to impact some businesses.
Namely Delta Airlines, by the way. They're still dealing with a lot of cancellations and disruptions from this outage, but we did hear from the company responsible, CrowdStrike, the cybersecurity firm. It says that last week's outage was caused by an undetected error or a bug in the content configuration update for its Falcon platform, which affects Windows machines. The cybersecurity firm says its preliminary post-incident review had these sort of details, but there will be a full analysis coming out as the investigation continues. The company says that it is taking measures to prevent the problem from happening again by staggering the rollout of updates so they won't be as regular. They will provide more details on the updates and give customers more control over the timing of installing those updates, because it was the update to this software that caused all of the outages, and that's in addition to beefing up their own internal testing, Cynthia.
Not going to appease very many people, I'm sure. But let's turn to tech stocks. They're not exactly the darlings of Wall Street right now, Ari. In fact, we're seeing a bit of a sell-off.
Actually, quite a big sell-off at that, Cynthia, because not only did CrowdStrike fall another 4% today, but pretty much all technology stocks. It all started after, remember yesterday we talked about Tesla's quarterly earnings?
Yes.
Well, that was after the close of trading yesterday, so today was the day that markets really reacted to those results, and it wasn't good. Tesla's stock fell more than 12% today. Now, that's on the stock index known as the NASDAQ. That had its worst day in almost 2 years, falling 3.6%. It wasn't just Tesla. Other stocks like Nvidia, the chip giant, ended up dropping almost 7%. Google's parent company, Alphabet, down by almost 5%, because a lot of investors are wondering if the losses from Tesla are sort of a broader market sentiment about technology stocks as a whole. So a lot of investors didn't like the sound of yesterday's earnings results. I'm not sure if it's something that I said, Cynthia. I'm just reporting what I see, but investors are not liking the feel of it right now.
Interesting. Okay, something to watch very closely, I'm sure.
Absolutely. We'll see how it goes.
Definitely. Ari, as always, thank you for joining us. Good to see you.
You too.